In this video, I'm going to show you a trading strategy that works off of the daily charts of Australian dollar versus the US dollar, and it uses a simple signal generated by the MACD indicator, and it has a win rate of over 80%. The original idea for this trading strategy was to take the same strategy and apply it to various forex pairs, so maybe 6, maybe 10 different forex pairs, hoping that the strategy would work well enough on some of them, and using it combined would actually be quite a good strategy for you guys to use. Finding a strategy like a one-size-fits-all strategy, or the same strategy that works across different markets, is not normally something that I find works, and not normally something that I do and I trade, and this case unfortunately was no exception. That same strategy I tried on 9 different forex pairs, didn't work. It only produced reasonable results using pound versus the yen, but pretty good results on Australian dollar versus the US dollar. So really, out of those 9 pairs, 2 of them was probably usable. One of them was pretty good, and that's the one that we're going to look at today. But I haven't just stuck with the basic strategy on Australian dollar, US dollar. I've actually modified it further, and that neat little modification has allowed us to make more money and reduce drawdowns. So I think you're going to like that one. Firstly, I'm going to show you the strategy on the computer and how the basic strategy performs. And then I'm probably going to go over to the whiteboard and explain the modification that I'm going to do, because it's not like one that I've actually shown you before. So I'll talk you through the modification, and then we'll see how that modification is actually an improvement overall on the strategy. So let's go over now to the computer to see how the basic strategy works. In this first workspace then, I'm just going to show you the basic entry signals using the MACD indicator. Now, I'm using data from Oanda, and it's from 2008 through to the end of 2018. Then what we're going to do is look at some adjustments and modifications and apply some extra data from 2019 through to March 2021, so an extra couple of years of data just to see if what we've done is going to continue working in the future. What we need to do then is apply the MACD indicator to your chart. Now, we're not interested in the lines of the MACD. All we're interested in is this histogram. And so we've got this 0 green center line that runs through, and then we've got the histogram, whether it be negative or positive. And quite simply, all we're doing is initiating the trades. So we're buying when the histogram goes from negative to positive. So it's negative here, it's positive here, and then we've got a buy trade, and then the opposite. So as soon as it goes negative, which is here, you can see next bar, we've got a short trade. Here, look, it's gone positive, next bar, buy trade, and so on. Here, it's gone negative, next bar, short trade. That's how we're using the MACD histogram for entry triggers. At the moment then, this strategy is what's called a stop and reverse type strategy. So the exits are actually entries in the opposite direction. So we haven't actually got a fixed exit criteria at the moment. So let's have a look at the performance report. And this is the equity curve, starting equity of $100,000. And you can see over those 11 years or so, we haven't really made any money. It's just gone sideways. Now we can see the new highs in the equities with the green dots, and we haven't made a new high since about just before the middle of this data. So not particularly good strategy. But we're going to use a modified exit, an exit that I often use, and that's the first profitable close type exit. So what that means is once we're in a trade, at the close of every bar, we look to see if the strategy is in profit or not. And if the trade is in profit, then we simply exit at the open of the next bar, which is normally immediately after, because we're dealing with Forex or a 24-hour market. If we're in the trade but we're in a negative trade, then we just stay in the trade, and we're either going to get stopped out, or we're going to get a signal to take the trade in the opposite direction, or we wait for it to close in profit and then we exit with the profit. So I've created a little input where I can quite simply just switch that so we can see how that changes. So now you can see that we've got these same entry signals. So the MACD histogram has turned from negative to positive. We've got a buy trade, and then we're looking at the close of every bar, and it's not until this bar here where we've closed in profit, and then we can see we've exited at a profit the next open. Same with this short trade here, same with this long trade, same with this short trade. So let's have a look to see how that's changed the equity curve. And straight away, there's the equity curve. You can see that we're making new highs right up until near the end of the data, which is a great start. The next thing we need to do is introduce a stop loss, because I don't like trading without stop losses. So this is the same strategy with the exit on the first profitable close, and we're going to optimize, we're going to use a fixed pip stop loss. So I've already run an optimization from 0, which is using no stop loss, which we've just seen, all the way through to 400 pips down the bottom here. Using no stop loss, we've got an average trade of $109, 24,000 net. And as we move down, we're moving in 10 pip increments. So this is 10 pip stop, 20 pip stop, and so on. If we move down, we can see that as soon as we get to about 150, 160-ish, numbers start to get the best, right the way through to probably about 250 pips when they start to tail off a bit. So anything between 250 and 160 I would be happy with. Probably somewhere in the middle I would choose, and 200 pips is probably a convenient stop loss to use. So let's use the 200 pip stop and see how that works. I've already applied that to the chart here, and it's made our equity curve look a little bit better. The next thing I want to look at is the minimum profit level. Now, I've mentioned on the exit of the trade, once we're in a trade, we're looking at the close of every bar, and if we're showing a profit, then we exit at the open of the next bar. If we're in a loss, we stay in the trade. But what if there was a specific level of profit that worked better? So what I've done is I've actually tested that, and I've looked at profit levels between 0 and 150 pips. So if we used 100 pips, for example, at the close of every bar, we want to see a minimum of 100 pips profit before we exit the trade. If we're above 100 pips, we exit the trade. If we're below 100 pips, then we stay in the trade. Now, I don't know that 100 pips is going to work, but we're going to run an optimization and we can check that. It's a bit different to a normal profit target, a normal limit order to put in the market, because a normal limit order would regard every single price all throughout the day. All we're interested in is the closing price. At the closing price is the trade in profit. It might have been in much more profit during the day and then come down or come up depending on which way you're in the trade, and showing a lot less profit at the close, but we're checking at the close to see how much the profit is. So I'll show you that optimization that I've done in the next workspace. And you can see in this right hand column the minimum profit, and it goes from 0 through to $1,500, which is equivalent to 1,500 pips, because at the moment we're trading one full lot and each pip is worth $10. And we can easily see from looking at the net profit and the average trade that the highest values are around these smaller numbers. So at the moment that's $150 or 15 pips, all the way up to maybe 45 pips, 50 pips. They work quite well, but clearly the best numbers and quite a stable central area is 150 or 15 pips. So we're going to use that, see how it's changed our performance report. We can see straight away that our equity curve is now smoother. And we haven't really looked at average trades yet, but our average trade has increased up to $208. We've got a percent profitable of 76% at the moment. The largest losing trade is 2,000. That's our stop loss. And if we look at the maximum strategy drawdown is 12,700. Net profit of 45,000. Next, I want to show you the daily filter that I'm going to apply. And it takes a little bit of explaining. So I'm going to go over to the whiteboard and I'll walk you through it there. Then we'll come back and see how the filter works with regards to the performance report. We've already seen the basic entry criteria using the signal from the MACD indicator. But now we're going to actually look at filtering some of the trades. I'm going to show you an idea that I got from Oanda, where I got many of my ideas from, in fact. And what we're doing is we're looking at the previous daily bar. So when we get the signal from the MACD indicator, we want to look at the daily bar prior to getting the signal and see that it meets the conditions that I'm just about to show you. We're going to call this an indecision filter. What we're looking for is a daily bar. So I've drawn out a regular daily bar and a candlestick. And the reason it's called an indecision filter is because we can see that prices have opened here, and then we've seen a range of right up here to down here, so the highs and the lows, but then they've closed quite close to where prices have opened, and that gives us a very small body on our candlestick chart, or a small range between the open and the close on the normal chart. And what that's suggesting is that the market opened, it went wildly up, went wildly down, but then closed quite close to where it opened, so it couldn't make up its mind, or it was indecisive. Okay, that's why we're calling this one an indecision filter. But we're not just guessing at the levels, we do actually need to measure the levels. Now this is obviously much easier if you're using automated software like I do to trade these, otherwise you're going to have to probably break out your calculator. I've actually done some demonstrations here to show you, and it's pretty simple. The first thing we need to measure is the range of the bar, so that's the high minus the low. In this case we're looking at here to here, and I've just labelled these 1,900 just to make the maths quite easy. And it doesn't take much working out that the range of this bar from 900 to 1,000 is 100 points. Then we want to look at the range of the body. We call it the body of the candle, or the range between the open and the close. So depending on which one's higher, in this case the open was higher than the close, so we take the open and then subtract the close to get our other range. In this case I've marked the open as 960 and the close at 940. So the difference there is 20 points. So we've got the whole range from the high to the low is 100 points, and the range of the body, or between the open and the close, is only 20 points. Now this is just an example. For the strategy, what we want to look for the range of this to be less than 50% of the larger range. In this case, it's 20%, okay? Because we got 100 is the range of the day, and then the range of the body is only 20. So that could actually be up to 49 points, because that's less than 50. If this range was 60, then it would be 60% of the overall range, and that would be over our 50% filter, so we wouldn't take the trade. So we want to see a small body, or a small range between the open and the close. We want to see it less than 50% of the range of the day between the high and the low. I hope I've explained that as simple as I can, and I think this modification is well worth using on the strategy. Guys, if you're enjoying this video, please do me a favour and hit the like button, and if you haven't already, please subscribe to the channel. Now let's go back to the computer where I'm going to apply this indecision filter, and we'll see how the results change. Now you know how that indecision filter works on the daily bar. It's probably a little bit difficult to see on the chart itself, but I've included it in my code. I've labelled this input yesterday filter, and if yesterday filter is 1, then that means that filter is on, so we're only taking those trades with the small body of the candle. and let's look at how that performs. The equity curve is even nicer. That is pretty nice. The green dots show us the new equity highs right the way up to the end of the data. The average trade has increased from $208 up to $292 now, so we've got much better quality average trade. The largest losing trade is that stop loss 2000, that's still the same. We're taking less trades now, obviously, because we're filtering. The accuracy, or percent profitable, has gone up to just over 80%, so that's good. And the net profit is down. That's because we're taking less trades, but they are better quality trades. And look at the maximum strategy drawdown. That's down from 12,700, now down to 8,400. So that's really good too. And the last thing I want to look at is that out of sample or extra data. In this workspace, we have, I'll just show you, data from January 2008 through to, we're actually in March 2021 at the moment. We can see down the bottom here, March, about the 26th of March 2021. Let's have a look at the performance report. Pleased to say, look, we're making new highs. So right up with this brand new data, we're still making new highs. That's great. If we look at the total trade analysis, average trade is almost identical, 291 compared to 292 before. Percent profitable is almost identical, within less than 1%, so that's good too. Net profit obviously is going to be higher, and the maximum strategy drawdown is still actually the same. So the out of sample data performed really quite nicely, which is always great news. We've looked at a strategy then which uses a basic signal from the MACD indicator. We found a market that it works reasonably well on, especially when we've applied that first profitable close type exit. We've looked at stop losses, found one in a stable area which works, and then improved things even further with that really easy indecision filter for the day prior to the signal. And it's turned out to be quite a nice little strategy. What I'll do is I'll add this strategy to my watch list of strategies, and then I'll keep an eye on it. If in 2 or 3 months' time it continues to make money and performs well, then I'll add it to my own live real money trading strategies. If you have any comments or questions about this strategy, then please leave them down below. And if you like this sort of video and you want to see more strategy type videos, then I've made quite a few recently, so check out some of my past videos. But until the next one, this is Jared Goodwin, and thank you.